Hello and welcome to the Money Chasers podcast brought to you by Think10 Capital. Today, it is episode 3 of the Money Chaser podcast, and we're excited to introduce Chris Dixon. Thank you for coming on the show today.
Hey, Michael, great to be here. Thanks for having me.
No problem. It's awesome to meet you. Now, look, let's just jump straight into this. Tell us a little bit about yourself, what you do, and we'll kind of take things from there. What your story is.
Yeah, great. I'm a member of Think10's capital markets team with specific responsibilities in managing their digital fund and driving strategic growth. Prior to that, I've had a really interesting kind of hybrid career where I've worked with a notable prop firm as a financial trader. I've worked in building funds in the real estate industry, and I have also been an entrepreneur in the wellness space, where I have worked with performance coaching, yoga, and wellness. So it's a little bit of a blend between the kind of investment arm of my career and what I like to call is kind of my passion project over the years, where I have turned a passion for kind of yoga, wellness, and meditation as a little side kind of project. So interesting, I always find that that's kind of a fun item to bring up where people find, if I'm talking from someone in the wellness space, they're surprised to hear that I've been involved in the investment side of things.
Yeah.
And if I'm speaking to someone in the investment side of things, they think it's kind of funny that I've been involved with yoga. Meditation. And so, but interesting enough, I think they run very parallel. Some of the, just like athletics or anything like that. And, the practices of health, wellness, meditation, mindfulness, have also contributed to how I act in the workplace, how I approach my performance in my career, and even in trading, investing. Mindset is very important.
Okay, and how did you, I guess, get into the whole wellness side of things to start?
Good question. I think it's just around it from being a kid. I grew up in San Diego, California, Southern California, and it's a big hub for, kind of triathletes and surfing and athletics, partly, I think, because of the climate, where you get a lot of professional athletes coming down there to train even in the winter. So I just kind of grew up around it, played pretty much every sport there was, and kind of transitioned out of team sports and into more surfing, mountain biking, snowboarding, things like that. So more into the outdoor adventure sports as I grew up. And so it just kind of got me exposed to that lifestyle. And then when I was maybe 18 or so, when I went off to uni or college, I met a mentor there who was into yoga and meditation. And that kind of set me on a path of the last decade plus of pursuing that as kind of a tool for excelling in the modern lifestyle.
Wow. Okay. I think we should do a whole another podcast on that side of things. You and I should sit down and talk about all that, because I can go on into a whole other tangent talking about that stuff. I'm all about, self-wellness and looking after yourself and meditation, using your mind to the most advantage that you possibly can. So there's definitely a lot of different things that we can touch on there, but that's a whole nother podcast. Let's jump into your crypto side of things. So are you currently now working full-time in the crypto space?
That's correct. Yeah, absolutely. Yeah, I'm working full-time in the crypto space on the back of working with a prop firm. I'm now with Think10 Capital. We've got some fun things in store. And yeah, I think 10 is, a forward-thinking capital group who, has invested in strong businesses, small and medium businesses, as well as, your equities and recently emerging into the crypto space, which, we're really excited about. So stay tuned for that as we go along.
Yeah, for sure. Yeah, I think 10 is doing a lot of really good things all over the world, not just here in Melbourne. So what does a day-to-day kind of look like for you at the moment?
Yeah, well, as you know, the crypto markets are 24/7 markets. So you've got 24 hours a day, 7 days a week that these markets are ticking along. So I think in creating a full-time role or, trading with the pros, I personally want to create as much structure and scheduling as I can are, specific times of the day when we see volumes surge in, and I want to be as regular as I can so that I can take a weekend off here and there and be able to sleep at night. So yeah, generally speaking, you've got the the major kind of markets where you'll see volume start to hit. So say, for example, 11 a.m. Here in Melbourne, we'll see the Asia session open, where you get Hong Kong and Singapore and previously China, but Korea, where you get some volume surge in around 11 a.m. And so you'll see kind of the move with the market makers and what the sentiment of the market is, what it's doing. Is it ranging? Is it trending? Is it ripping up? Is it tearing down? So that's around 11 a.m. In the evening, say 6-7 p.m. Melbourne time, you get the Europe Open. And then closer to midnight, we get the US Open, which is kind of the main event where you see the biggest volume coming through. So that's kind of those are the times where I've got my eyes and ears on open the most. For example, last night I stayed up late because it was the first day of the Bitcoin futures ETF, which traded $1 billion in its open. And it was pretty wild, and it pushed, it's been an exciting week in the crypto space. We've seen Bitcoin close its highest daily level ever. We've seen that was, actually if you don't know, the candles, the daily candle closes at 11 a.m. and so the new candle opens. So today at 11 a.m., just about an hour and a half ago, we saw the highest daily candle close ever. On Monday, we saw the highest weekly candle close ever. So the only thing that's left at this point now is to see us wick to the all-time highs. And if the market can do that. So whether or not it's the Asia session that's going to do that, or if we see that tonight through Europe and US session, it wouldn't be surprising. But these markets, it's not. There's no. It's all a game of probabilities. There's no 100% certainty. But that's the sentiment that the demand, the supply, the underlying value, and the market sentiment is pushing Bitcoin to all-time highs.
Right.
And so anyway, I guess as far as the daily schedule, I try to be as regimented as I can. I wake up early, I go for a run, get some fresh air, move my body, just kind of set the tone for the day. I'll get up on the screens, and I want to have my eyes on as much as I can about kind of market news, the open interest, how many people are opening or closing positions, the volume traded, was it a big volume day in the last 24 hours? Was it a quiet volume day? What did the markets do on the daily? I'm more of a technical analyst as well, so I'm going to be watching the formation and the structure of daily candles, 4-hour candles, weekly candles, and see kind of what the formation of the charts are looking at, as well as what the underlying drivers are. I even use a tweet deck, so I also want to look at what is in the news. I've got a Twitter list, for example, that has all of the tradable products that I'm looking at trading or investing in. I want to look at news as well. But as I mentioned, I am more of a technical trader. So things like Shiba or Doge in the recent past, where they've just rallied off of Elon Musk tweets and things like that. I generally don't participate because mostly because of the structure around it. The charts don't always play out that technical and can be quite irrational. So I look for
a strategy.
A good, strong, repeatable strategy. And trading news is not my forte, but it's something I get amongst. So anyway, that's kind of how I start my day. And then I hit the Asia Open, kind of setting my positions for the day, whether I'm needing to rotate my long-term holdings, whether there's some short-term plays. Every once in a while, I'll trade some short-term kind of scalps where there's anomalies in the market or price rips really high, really fast, and you can fade it back. If price is ripping down, and you can fade it back up. But generally, I'm not too much of a scalper. Just here and there, I'm looking for good high probability trades that I can hold. So I can take some swings. I'll take some certain chart patterns that we can play out. And generally, I'm looking these days and playing off the daily 4-hour and 1-hour candles. So some longer term plays, as opposed to intraday trades where I'm just in and out hundreds of times a day. I'm doing less of that and more kind of longer term sentiment, because the general thesis is that these markets are going up. We're still early days. It's kind of like right now in October of 2021, it's like we're in 1997 pre the internet boom.
Yeah.
And so, the overall thesis is that these markets, it's still early days, like you mentioned when we were chatting before. So, there's no need to try to rush these quick moves. And so you just kind of build your thesis, do some good research, understand as much as you can what you're trading, and get amongst it.
Yeah.
So and then I try to towards the end of the day, sure, I'll do plenty of reviewing of the trades, some reporting, logging them. It's really important to go back and give yourself feedback, what you did well, where you could improve, what you might have done wrong, how you managed a trade that went really well. Every good trade has a good entry and a good exit.
Mm-hmm.
Also, how you manage a trade that went wrong, because it's impossible not to have losses. Losses are part of this path of work. It's inevitable.
Yeah.
And you can still be profitable. The game is to be profitable, not to be right. So, I'm sure you and your listeners would have heard this many times that generally retail traders are, 96% or so of retail traders lose money. So the odds are stacked against the retail trader in many cases. And I get, you and I were talking about the NBA beforehand, and I always think that this is a really interesting kind of analogy. It's not entirely relevant, but interesting anyway. So if you wanted to go and play a game like one-on-one, you versus, I don't know, LeBron James or one of the top NBA athletes or whoever your pick is. If you wanted to go play one-on-one, you wouldn't really bet on yourself. You probably wouldn't put $1,000 on yourself to go play LeBron. And
I'm sure
so similarly,
there's a lot of people out there that would put that money on themselves, but
maybe. So I don't know. I've never seen play, but maybe you would. But I guess that's kind of my thinking too. Is a lot of people are willing to pop $1,000 into something, but they're going against LeBron James, mm-hmm. so to speak, in the financial markets.
Yeah.
Because you have groups out there who are market makers. You have groups out there who are trading $1 billion a day, and they have the most sophisticated technology, algorithmic trading, machine learning capabilities, access to order books. They can see exactly where your position was placed. They can see exactly where your stop loss is. And the market maker gathers liquidity from retail traders. So they have the ability to move the markets and scoop up liquidity on both sides. So you'll see even in Bitcoin, for example, last night wicked up, to pop all the short positions. They liquidate them, and then it wicks down and liquidates all the longs who had entered there, and then it goes up. So it does all sorts of these things where, that's kind of a go-to play, where these market makers are just gathering liquidity. And I think a lot of the retail traders don't understand the business model of the exchange and the market maker. And I think it's really relevant and important to understand. So I might have gone off on a little bit of a tangent there, but
no, that's all valuable information. Like, I think one thing that we might need is just like a little bit more of a breakdown. So even, I mean, you mentioned swing trading in there. Kind of what is swing trading, I guess, to start, and then we can kind of bounce off of that.
Yeah, great. Well, I mentioned in the beginning scalping versus position trading versus swing trading. And, a scalp, for example, is just a short trade where you see a high probability move that's going to happen and you just take a slice of it. So let's say, for example, your sentiment is that Bitcoin is going to go up, for example, to all-time highs. Mm-hmm. And you watch price pull down really quick, and then you can see maybe in the order books that lots of people are buying, or you can see in the charts that it's trying to pop up, and it starts to go, and you jump in, you take a long position, you buy, it goes up a little bit, and you exit, and it might keep going up, but you've just scalped, you've just taken a little slice of the move. Some scalpers will trade hundreds of times a day. They'll
Yeah.
do that hundreds of times, and you don't need to catch the whole move to be profitable. You can just
Right.
scalp little slices. It's just kind of, I call it like combing the markets, or kind of massaging through the market all day. And the kind of statistically, it's like a casino. You might take, let's say, 100 trades, and maybe you're right on 70 of them. You're profitable on 70 of them, and you take some losses on 30 of them. But the statistics and the strategy works where you can actually take home profit.
Mm.
So that's kind of scalping. As far as kind of a swing trade, it's kind of, there's so many different styles or ways to categorize it. But let's say you just see a swing low, you see an area of value, some support building on the charts where the buyers are buying up there, and then you swing it up to the next level or to the next resistance. And I look for certain patterns and certain areas of consolidation. For example, May of this year, we saw it ripped down to the market. It lost 50% of market value. There was a capitulation where all these long positions that were levered up were liquidated, and it took maybe 3 months for the market to recover. But the market bounced to, I can't remember what it was like 30,000, 28,000, something like that, in Bitcoin, that is.
Mm-hmm.
The market rallied, it slipped back down to 30,000, rallied, slipped back down to 30,000. Granted, this was happening over 2 or 3 months. And that third time it was down there at 30,000, it started to catch some support. And then the next swing now from that 30,000 level was to where we are now, about 64,000. So that is an example of a major swing that has occurred over the last, has it been about a month?
Mm.
Yeah, it's been,
Yeah. Well,
maybe even longer, 3 months, I think.
Yeah, we had another crypto specialist on probably 3 weeks ago, and at that I just rewatched that podcast, and that was, at that point we were talking about Bitcoin. It was at 70,000, and well, it's at 3 weeks ago now. It's at 87. I just hit 87 today. I'm not sure what it's at right now, but like, this is,
oh, you're talking Australian dollars.
Australian,
Sorry,
Australian.
I look at it in US dollars.
Yeah, no, that's okay. Yeah, so just understanding how quickly it has recovered in such a little time is where I think a lot of people get. Would you agree? A lot of people get scared and sell when things start to drop, and like, especially people that aren't too educated on the whole DeFi and cryptocurrency as a whole. Is that what you think happens, makes it drop so much?
It's a good question. It would lead to it dropping. And I think that maybe I'll take your question in a couple directions. But yes, I think people, retail traders, or those who are don't quite have the experience, would certainly, the harder it falls, the longer it falls, the more they sell. So, I'd see a lot of retailers buying the top and selling the bottom, the exact opposite of what you want to do. And I think if en masse there are a lot of people, pulling their coins, their tokens, and their money out of the markets, it would definitely make the market drop. In May, for example, it was driven by a little something different. It was called a capitulation, where, how do I describe this? So you can buy crypto on leverage, right? So let's say I have $100. On some exchanges, I can put 100x leverage on that, and that allows me to buy a position that's 100 times that. So you've got this huge position on, but you only own this tiny little slice of it. So meaning if the price goes up, you get basically 100x the gains that you would. But if price goes down, you only own that small slice, so your position will liquidate. So you just lost everything you had. So that's kind of buying on leverage. A lot of people do it because it's attractive, but it's more of a kind of marketing ploy, I think, and for some of these exchanges.
Mm.
So anyway, this big sell-off that occurred in May was some of these large positions. Some people would have multi-million-dollar positions on leverage, and as prices pulling down, it hits someone's stop loss, meaning they can't afford to hold this position anymore because they only bought this little slice.
Mm.
And when your stop loss is hit, it sends a big sell order down into the market, which pulls price down a little bit more. And then it hits the next person's stop loss. So that sends a big sell into the market that slides down a little bit more. And it was just this cascade of boom, 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 boom. It just kept hitting people's levered stop losses. And next thing you knew, you had this capitulation where it was just ripping so far, so quick, massive leverage flush down the network, that the exchanges froze up. No one could even really manage the trades they had on anyway because price was ripping down so quick. Yeah, so that was an example of a big event where people were pulling out. And you'd probably, to be honest, if you hadn't reduced your position towards the top anyway, maybe it would have been the best thing to do, to cut your losses and pull your position out. But if on the long term, it just depends on your investment style. If you're happy, to hold your Bitcoin or whatever crypto you're investing in for 5 years, then it's kind of part of the norm.
Yeah.
We've seen these markets pull back 50-80% multiple times, and those long-term holders, they're used to it by now. They just accumulate more. They dollar cost average in, meaning they just buy a little bit here, a little bit here, a little bit here, and they just kind of average in and don't sweat it. But those who are trading on high leverage could have lost or blown their accounts. So that's much more painful. So I guess the lesson in that is, is risk management. And, I think it just depends on your trading style, but a lot of pros aren't even using much leverage, 2x, 3x maybe. Some pros or some firms, sure, they're encouraging you to use 20x, 50x, or where available, but it's a different strategy. It's a different style. They use different models, business models, so that you can make an income from that. But yeah, so that's kind of my thoughts on that. But but I think one thing's interesting. While the price is pulling down, like you're saying, maybe the retail trader, they want to exit their position, but that's when the pros and the market makers are buying. So it's kind of counterintuitive. You kind of want to be buying as it's going down. Of course, you don't want to catch the falling knife, as they say. You don't want to buy in too quick, but that's where if you can just average in slowly and accumulate, or even place your orders in areas where you think there's some value, that's what the pros are doing. They're buying, so you don't really want to be selling
right
at that time. It's when it's counterintuitive, you want to be buying up.
Yeah, of course. And I think, that's the thing. It's kind of what I speak on. Like, I think people just don't. A lot of people are kind of getting into crypto based on the hype, and not necessarily understanding, that this is the direction that our world is moving into. And instead of getting in and researching and doing your own research, people are just saying, oh, what should I buy? Okay, I'll just go get it. And then they crap the bed as soon as, it starts to drop a little bit, where you shouldn't. I mean, especially if you're not too educated. I know a lot of people, if you put, say, $1,000 into something and then you didn't look at it for 5 years, obviously you're going to have profit. But if you're looking at it every single day, not understanding how the market works, you're probably going to be on edge and extremely anxious all day. So
I agree. Yeah, and is that worth it? I guess it depends on your thesis, your style. But if you're looking at it for a long-term play, then granted, it's hard to time things. But let's say you bought in like the 2020 lows, your $1,000 would be closer maybe to 10x what it was, just 18 months or so ago.
Yeah, right.
And you probably wouldn't need to be losing sleep over it or worried about it. And so I think there's value in that alone, where it can be consuming. I think that's something that's not spoken about often enough in these markets, where it comes with pain. I mean, trading can come with pain because it involves loss, and that can be challenging. So that, you hear these things, do your own research, or only risk what you're willing to trade. Sure, that's true. But, there's also the emotional weight of experiencing loss and being able to cope with that and, understand truly what you're risking. Because like you said, there's hype in it. So a lot of people pop in their money or their capital thinking, okay, I'm going to double this so that I can do something fun. But then they end up losing the whole thing. And then that sucks. So, that's a part of it too. So I think that, and it really only comes with time and experience, I think.
Yeah, of course. Okay, so what would you say are some, I guess, ways to assess the potential risk of any given cryptocurrency?
Yeah, it's a great question. I think first off, each individual's risk appetite will be different. Like, let's say, for example, you have someone who's making $50,000 a year, and they've got $500 that they'd like to put in the market. Or you've got someone who's making $5 million a year and is happy to put $1 million down and lose it or double it. So, their risk profiles will be very different, how they invest or how they trade and what kind of risk they'll want to take on. And it just, I guess we could take the conversation a few different directions, in weighing out different crypto products or assets. There's risk to the entire network. It's an emerging market. Still, right now, it's a very volatile market. That said, I think there is a difference from the stability of something like Bitcoin, Ethereum, or some of the blue chip, quality projects versus, something, I don't know, the altcoins. There are some products there that have lower liquidity who, you see the rug pulls or even just newer projects that people might not know much about. So there's a whole profile of risk across these markets. So I guess generally speaking, the big players, the majors, your Bitcoin, your Ethereum, and kind of the top, let's say 5-10 products would be generally on the less risky side. But re-emphasizing here that it's a volatile market, it doesn't go without risk. And then you have this whole fringe of alts, and maybe I don't even know. It runs so deep. It's as far as your altcoin and networks that people are making new coins every day that come and go.
Yeah.
But there are a lot of great projects out there. So and it's the information is very accessible. Even on Twitter, most every product and project, they have a Twitter. They'll share their white papers. They'll share what they're up to. You can look on all these different sources online of the revenues of different projects, what they're up to. And that's one thing about the technology as a whole, because of the nature of, how it's all coded and put together, there's so much data available. So you can really, with a little bit of time and energy, you can really start to understand some of the projects and why they have long-term value or why they don't.
Yeah, something I just started doing a little bit of research on over the past few weeks was an altcoin called VeChain, talking about one thing that's interesting in the world of authentication on what's the word I'm looking for? Authentication on luxury goods, and that's a Chinese crypto that authenticates that something is actually real. So they're partnered with the CEO of Louis Vuitton, I believe. And so every time that someone buys, say, a Louis Vuitton handbag or whatever it may be, it gets processed through VeChain. So then forever, whenever they try to sell it or something like that, you have the digital receipt that then shows that this is authentic from Louis V, rather than people constantly selling these fake handbags and stuff, which I saw a crazy statistic that showed that 70% of the market now is of fake retail goods. So
Interesting.
In terms of cutting that out, I thought that was really interesting to jump in on. It was only at 9 cents a couple of weeks ago, and now it just hit 17 cents like yesterday or 2 days ago. So it's moving pretty quickly, and I like the thought process behind it. So you just mentioned like really cool, innovative projects that actually help serve a purpose, and I think that's something that can be taken to a much larger scale of things. Everyone loves the authenticity or the verification that you might get for Instagram. If you get that blue tick next to your name, it shows that you're legitimate, that this is the real person's account. Like it's really like the verification of the person itself or the product. And then with what VeChain's doing, I think that's really interesting. But yeah, just lots of innovative projects like that. What would you say is is one thing that comes across your mind when it comes to these innovative altcoins and serving their purpose? What's one that you can think of?
Yeah, well, I'm just kind of piggybacking on what you're saying with VeChain. I think that's one great example of a use case that, okay, that you've mentioned Louis Vuitton there, but then the use case of applying that process is limitless. And there's the network effect. So it can apply to goods and services. Your products, so your Louis Vuitton, it can apply to athletics and reel clips, highlight reels. It can apply to artwork. It can apply to music. So even just that one technology alone, or that one product, VeChain in your example, I mean, it's just endless. Yeah. So I like to think of the whole network and ecosystem as kind of you're thematic, and there's so many different areas of focus where you can see this growth occurring and the value. For example, one that you'd probably be familiar with and your listeners would have heard of is Axie Infinity.
Yeah.
I don't have the chart in front of me, but it's probably done 15,000% or something crazy.
Yeah. I was literally just looking at that yesterday. I think it is 15,000 or 17,000.
Yeah, something like that. I won't bother pulling it up now, but it that's one case where there was a need, there was an opportunity, and there was value for people in it in many ways. So it's taking that kind of play to earn gaming model where you see people, a lot of gaming is a huge industry. Mm-hmm. And people spend a lot of time playing video games, whether they're getting paid for it or not. In most cases, not getting paid for it. It's for fun. But in the case of Axie Infinity, they've got this cool kind of Pokemon-like video game, and people get to play it and earn tokens from it, which can be converted into cash. So I mean, you can literally play a video game and make money. So I think there's an underlying token called Smooth Love Potion, which kind of drives your characters, I believe. I've never actually played the game, to be honest. Also, the characters themselves, I believe, are kind of minted as NFTs. So there's value. You can breed these characters and you have a little character that has value. So in this kind of metaverse, you've got digital assets that have value, but then that also translates to real world value. I know recently during lockdowns in the Philippines, I believe it was, people were supporting their families playing Axie Infinity. And then you have this emergence of small businesses who are then kind of taking on scholarships where they're giving people Axies to play, because actually that's a slightly different conversation, but because of the increased value in Axie Infinity, it got harder and harder to buy one. So if I'm only making $3 or $5 a day, I couldn't afford an Axie myself. So I go to someone like you who already has 5 Axies and you let me use them, and I make some revenue and we split the profits. So there's a bit of that going on. But anyway, that's just one example of a product that has some value. It has a case of use. It brings value other than just money to people's lives. They're having fun playing, and they're supporting their families. They're getting involved in something exciting. But then you look at the charts, and whoever was trading that or investing in that also would have done very well. So I think that's a cool example of something fun that's going on in the space. Axie, I think there's some other games. Alice is another product that's on gaming.
Mm-hmm.
I forget the one that's actually right here out of Australia. It's blanked my mind. I'll come back. I'll let you know if I remember it.
One thing I just found out was there's a really interesting project on Solana art. So using Solana as the NFT platform. There was a group of New Zealand guys that started this up, and it was called Degen Apes.
Okay.
And yeah, you've heard of that project specifically?
Yeah.
So that obviously did really well, and I just found out that they were a New Zealand group, and they kind of just made it just to, because why not? And then it just went crazy, and they were struggling for a couple of days to, like, going back and forth with the guys at Solana, and trying to figure out, how exactly their servers could make this work properly. And after a whole bunch of going back and forth, they ended up figuring it out. But now the floor price is at like 70 Solana. When they first started, it just blew up, and they had the mint price at maybe 1 Solana. And yeah, their servers weren't prepared for the crazy boom that it had. It was kind of like the Bored Ape Yacht Club of Solana to start. And yeah, they're still holding and going strong at the moment.
That's incredible. Yeah, the NFT space has been something that I have been tracking and watching, but not participating in directly, as I find it hard to value, and it's hard to know, like, where it's the Bored Apes or the crypto punks or the crypto kitties. I guess I don't know how to value it. It's very kind of based on sentiment, right? But there's been something, an underlying value that will be very useful, and it appears that NFTs are not going away, and that, like we were talking about, it will be used, in digital assets, and that's only gathering momentum. So it appears that that's not going away. I had some notes from a recent document release. I thought it was pretty cool. I think from like 2019 to 2020, I think the sales in NFTs was around $250 million. But then from 2020 to now, 3 billion. And you would have seen some of these, like, single, what were they, the CryptoPunks?
Yeah.
Like almost like pixelated images that you look like you were made on Microsoft Paint or something, like old school. And some of them are going for like 8 figures, $10 million plus, $15 million. It's pretty wild.
Mm-hmm.
So yeah, I mean, that's a whole nother kind of ecosystem in and of itself. But I think, that is definitely a symptom of something that's not going away, this NFT and the digital asset space.
Yeah, and sorry, I was just gonna say, I had a great conversation with one of my friends yesterday who was saying that he's even now completely shifted from the NFT space, which is what most people would think is just the actual digital art itself, but he's more taking that shift over to the other side, which is, looking at where people are buying houses, buying actual assets, buying potential, like anything that you can have under a smart contract. So let's say if you have a house, you put it under a smart contract, you sell that to, John, and then John sells it to Abby, and you keep seeing, those royalties after each sale. That is where the mindset of NFTs and smart contracts is at for some people. If do you have any kind of thought and comment on that as well? I think that's a really, really interesting space.
No, I definitely agree. And what came to mind was tokenized real estate. It's something I've seen as well, and people kind of structuring commingled funds that are, tokenized. So whether it's like you said, where the actual real estate property is, tokenize itself, or whether it's split into hundreds or thousands or countless tokens, and so that multiple people would own one property, whether it's a large piece of property that everyone buys, a shopping center or something owned by thousands or tens of thousands of individuals, so they get a part of that. And not too different from the digital side of the NFT, where you're kind of got something in a metaverse where it's an item in the game or real estate in a game, like Alice, for example. And there was a land sale recently in Alice's game, where you're buying up digital land. But I mean, I don't see why that wouldn't translate also to buy up real land.
Why not?
So, and if it already exists, and I might not be aware of it, but it could already
someone's
exist.
already. I read an article. Someone bought a house and an apartment via smart contract in May. So it's been happening for a while now. It's just not spoken about. So it's interesting. I think that a lot of people are trying to keep a lot of this stuff away from some people and not let it get too big, because it is slowly heading that direction. I mean, even when I say slowly, it's a lot in the grand scheme of things. It's happening a lot faster than even the internet was adapted.
Well, it's exploding. Yeah, at this point, it's exploding. I mean, even Bank of America, one of the bigger players in the States, who have trillions of assets under management. I mean, they've just released a document saying that cryptocurrencies and digital assets are too large to ignore. It's a $2 trillion industry, and it could go to 200 trillion. And so now you're getting the institutions getting amongst it. You've got Bloomberg, who just put out a document saying that 100K Bitcoin is undervalued. So they're, the institutions are really starting to get into it. So, I think it's an explosion seeing these S curves, on the charts that are just going to be feeding into one another. And I think the kettle is only just starting to boil. Right. It seems. Right. And that's not to say that it's up only. It's like we were talking about. Sure, Bitcoin could go to 100K and 150K, and then it could pull right back down 80%. And go again. So there's cycles. There's the halving events, and there's a limited supply, which will drive it. But the market is also managed by the big players. So it's something to keep in mind. But definitely, I think, like you said, it's exploding. It's early days. It's only just starting to really gather some legs behind it. It appears.
Yeah. Well, I guess to piggyback off that, where do you see crypto in say 5, 10, and then 20 years from now?
Yeah, it's a great question. We look back to 10 years and where it's been from inception in 2007, 2008 to now, and the growth. And then looking forward some time, it seems that only now we've got the big players starting to step in, where it's starting to become more broadly seen. But still, it is a little bit of a fringe, right? Like, even though you might run in circles, communities, and networks that are very well aware of the space, you go into the petrol station or your local restaurant and you say, "Can I buy in Bitcoin?" No. You ask anyone in there if they are familiar with Bitcoin, probably, maybe half aren't. Maybe a quarter of the people in that restaurant or petrol station own it or use it. But also, I guess you look at someone like Apple or Google. Like, there was a time, there was this clip that I was watching. It was great. It was like 97 or 98, and it was a newscast, kind of morning news show. And there are 3 or 4 reporters making fun of how there's that silly @ symbol in an email address. What's that all about? And this whole www dot, like, that's a joke. What do I need to be a coder to figure out how to go to this web address or something? That was really funny. So it's like, and now that just becomes a norm. So I do think that in one way, shape, or form, this thing is not going away. And sure, we'll see coins and tokens come and go. It appears now that the big players are here to stay. So it appears that Bitcoin and Ethereum, they're the heavyweights, and you can see some other emerging, in that pack. There will be a lot of coins coming and going. The biggest, some of the biggest hurdles right now are regulatory. Where you see China banning Bitcoin for the 100th time, and the U.S. adoption and regulation starting to pick up a little bit. So I think the regulatory conversations and how this kind of Wild West landscape is regulated in the future will be really important, but it appears that it's being embraced more and more, especially, as I mentioned, some of these big banks and institutions starting to get amongst it. Also worth noting, I think I mentioned that the futures ETF went live last night, and also it was announced that a spot ETF was submitted from a group called Grayscale.
Mm-hmm.
So yeah, I think it just appears that it's only gathering steam. Now, I'm not one to make price predictions or anything like that, but like I said, the Bloomberg document was saying that 100K for Bitcoin would be conservative. And the stock to flow model, which I think is very interesting. This was you can look it up, stock to flow model. I think the guy's name is Plan B on Twitter.
Mm-hmm.
And that model is calling for something like $1 million per Bitcoin plus, which I think is pretty wild. But who knows? Who knows? I wouldn't say myself that Bitcoin's going to $1 million, but you can look at his model,
Mm-hmm.
and that's pretty wild. So yeah, and we'll see. I think that there's also conversations about the flippening of ETH and BTC, and it just depends who you talk to. You've got your different camps. You've got your Bitcoin maximalists and your ETH guys, and so yeah. But I think the general thesis is that it's early days. It's got the network effect, 200 million users, and it's only going to become more and more prevalent. I think and like we were talking about in the NFT space, even I think just even in our daily life, even the central banks and things like that will get involved, maybe even in different ways that it will affect even the traditional financial systems. It will affect different ways that we own property identification and things like this.
Mm-hmm. Yeah, for sure. It's an interesting one, as people that are very, very bullish and have said $1 million is definitely a possibility. And then definitely the inevitable that a lot of people are saying, and even yourself just said that it was a Bloomberg over 100K. So I mean, it's an interesting space to think about where it was and where it's come from, and even to look at things like Ethereum, where that was even just 6 months to a year ago to where it is now. I feel like everyone's kind of waiting for that next one to catch early. And I mean, if you had any sort of inclination onto what that next kind of Ethereum or that next Axie Infinity might be, what would be one that you have a bit more information on that you're leaning towards?
Yeah, well, like I said, I like to kind of think of the different themes, and also on the short term capital rotation, I like to keep an eye on capital rotation. So right now all eyes are on Bitcoin, right? As what do they say, the 800-pound gorilla. Mm-hmm. The market lead, all eyes on Bitcoin. And then Ethereum seems to lag behind a little bit, where we can get once Bitcoin makes its move, capital rotates into Ethereum. Then you've got Solana, for example, kind of following Ethereum, so then maybe capital rotates into Solana. Meanwhile, you've got your meme coins that are getting shilled online, and they're going crazy. So it's I definitely have a pool of projects that I like, and even overnight as Bitcoin rallied, you saw kind of some of the layer ones go. Your Atom, 1 inch, Aave, FTM, Phantom. Those were going overnight, showing some strength. Yeah, but in general, I think it's just kind of keeping an eye on some of those quality projects. And, like we were talking about earlier, there's, of course, so much going on in the fringe, new projects coming and going. It's just, I think what's important is to look into them, to understand them, mm-hmm. Get amongst the community online, whether it's Discord or Twitter or whatever white papers you can look at. And I think it's infinitely interesting. There's so much to see. So not to be too vague or ambiguous, but that's kind of how I'm looking at things: the rotation of capital and themes and quality projects.
Mm-hmm. Yeah, and I guess to add to that, to be completely bullish and out there, do you think that crypto could ever fully and truly replace fiat currency?
It's an interesting question. I think there's lots of different debates on that side of things. I don't think so at all. I think there's trillions of dollars, trillions and trillions of dollars in fiat, and governments and institutions built on it. I don't see that happening. But of course, the evolution of money and the financial systems, I see that happening, certainly. And if you maybe making a slight differentiation of crypto doing that, maybe blockchain is involved in financial systems evolving or changing, I could believe that, but I don't see, for example, us going the way of El Salvador globally, where we're all using Bitcoin as our currency and fiat's out the door. I don't anticipate that happening, but definitely I could see the underlying technology creating some changes.
Yeah. I haven't really thought of it that way. I guess you could implement a lot of different blockchains into what different governments and banks are doing, and I think there's lots of different ways that could be done. And that's the cool thing about just DeFi in general, is just there's endless amounts of opportunities and different things and directions that this could go. But yeah, I mean, I think one thing another one of our listeners wanted to know about was something called blockchain ledger. I haven't heard of that before. Do you have any information on what a blockchain ledger is?
Yeah, well, I was actually just writing a little bit of an article on it. I mean, are you talking about the underlying technology of blockchain? I was literally just pulling it out. I can just read it for you from a quote. Yeah, so yeah, I'll be putting this article out. Maybe I can link it to you once I've got it out. But let's see here. I mean, it's really just having to do with the underlying technology, right? So yeah, let me read you just the first two paragraphs, and
go ahead.
So the technology likely to have the greatest impact over the next few decades has arrived. From business to society to personal use, blockchain is sweeping across the globe, bringing unprecedented cases of use with it. From money and financial products to intellectual property, music, real estate, gaming, and data storage, blockchain brings computing power hundreds of times bigger than Google worldwide. So why blockchain exactly? Blockchain is an emerging technology that exists on a peer-to-peer network composed of digital transaction records called ledgers. Groups of ledgers compose a chain of cryptographically signed transactions grouped into blocks, which are accumulated and stored across a decentralized global network of computers. So basically the ledger is kind of the foundation. These groups of ledgers comprise the transaction nodes grouped into blocks. So basically it's, I'm not a data scientist or computer scientist, but it's basically the underlying technology that makes blockchain what it is. So the ledgers are kind of the Lego pieces that piece it all together, if that's fair to say. So each new transaction or communication event that occurs is added to the chain, digitally verified using asymmetric key pairs, and transaction history is securely recorded across multiple nodes of the blockchain. The underlying programming in blockchain technology means that all information is effectively and securely stored in ways that are immutable and cannot be tampered with. So hopefully that's not too dry, but that's just the first couple paragraphs of this paper I'm putting together. And it's, yeah, just in answer to your question, the digital transaction records are called ledgers in this technology. So everything, our entire discussion so far about blockchain technology and cryptocurrency, which is built on it, is having to do with these groups of ledgers that compose the chain. And not being a coder myself, it sounds pretty cryptic, right? Well, that's the whole thing. Not being a computer scientist myself, it sounds pretty complicated, but I think in general, I get a picture of it, of what that means.
Yeah, no, I think I'm going to have to read that 10 times to fully understand what that is, but it sounds like the beginning of a really, really cool article, and I'd love to read that. So yeah, if you can link us to that afterwards, that would be fantastic.
I definitely.
Yeah, that sounds really good. Really, really good. Okay, so the last thing that I have to ask you at this point is if you could give your past self any advice while entering the crypto space, what would that be?
Oh, I love that question. Well, I think it's a timely question. I mean, maybe understand the space a little bit more, do a little bit of research into it, and go slow and steady. Yeah, I think maybe extending even that out to anyone who is just wanting to get into it is, yeah, just to look into it, do some research, watch some good videos. There's some amazing material out there, awesome videos. Even on YouTube, you can dig through it. You might have to sift through some junk to find some good stuff of why the why is important.
Mm-hmm.
You know, why blockchain? Why is this technology interesting? Why is it relevant? And then I guess as far as the trading and investing side, I probably wouldn't recommend trading to anyone who's wanting to get in. I didn't recommend, if they were going to participate in some way, it would just be to invest in small amounts, whatever, if you're willing to throw away $100 bill, or of course you wouldn't want to do that, but if you could comfortably risk it and you can pay your rent and your do the things you want to do that make you happy, and eat well, and have that financial buffer and savings, but you have a little bit that you can put into an investment. Number one, understand it, and number two, don't use leverage would probably be my advice.
Mm-hmm.
Just dollar cost average. If you want to learn how to use leverage, learn on a paper account, figure it out. But for most of that 96%, that's not good odds. 96% are losing money.
Yeah.
So just stacking and dollar cost averaging, buying a little bit today, buying a little bit in a week, buying a little bit in a month.
Yeah.
I think that human nature is the tendency we want to be greedy, right? And we want more and we want more, and that's when we can get ourselves into a little bit of trouble in some cases. So that comes down to really important not to risk more than you're comfortable with. And if you're having a hard time sleeping at night, or you're stressed or anxious about it, you've probably risked too much. That's probably feedback, biofeedback, that you're getting this indicator from yourself that, ooh, I put a little bit more than I was comfortable with, so maybe I'll just take it back out and put it into whatever I need to, whether it's cash or the bank. I'm not a financial advisor, so I can't give any direct advice, but yeah, I think that emotional side of it is important too.
Mm-hmm.
Because if you're meant to grow your assets and grow your wealth, that also includes your quality of life and the things you do, and this can be one part of it. So again, I hope that's not too vague, but more looking at kind of a holistic view of investing and getting amongst the space. It's exciting. So, for example, I'll take it just for another minute here. I've got a friend who recently put $1,000 in a stock.
Mm-hmm.
It wasn't crypto; it was a stock. And I asked him why, and he said, because someone told me that this is supposed to be good stock. And this is someone I know for a fact is quite frugal, very good saver. And so I asked him, when's the last time you spent $1,000 on something? He's like, oh, it's been a while. And I thought, okay, well, if you're going to spend $1,000 on something like a bicycle or an iPhone, you want to know that it's a good product, and you want to know that you value it and that it brings value to you, because you're going to put $1,000 on it.
Right.
So I think that can be extended to our conversation with investing. If you're going to put $1,000 into something, you want to know that it's going to add value to you. You want to know that you want to own a piece of it. Well, just like you'd want to own that iPhone or that bike or whatever you were going to put $1,000 into. It's no different. So understand it, know it, and be willing to put that money into it because you understand it and know that it adds value to your life. I think that's the core of what I'd like to say to your question, or answer your question. And then once you're there, sure, okay, I've got $1,000 I can put in Ethereum. So I put it in Ethereum and I get excited about it because now I own a small piece of Ethereum. And then I go and I start watching videos on YouTube about Ethereum and how exciting it is and how amazing a technology it is. And then I start reading some books, and then I start talking about it and I get involved. And maybe that's what I'd say to myself. Don't worry about trading high leverage on Shiba Inu or whatever, because you'll liquidate. most likely, but instead take the latter part of my answer to the question and roll with that.
Right. No, that's great. That's great advice. I think everyone can take a little piece of that as they're going. One thing I did leave out is one of our main segments that we do on each of our shows, and it's called the chasing highs and chasing lows. So I guess one thing for you, what's something that's helped you bounce back from something? And this could be, we could relate this back to the wellness side of things. If you've chased a high and then you've dropped, or not necessarily within the crypto market, but you've been chasing something and you've had some sort of adversity that's made you hit a certain point. And then what's been your way to kind of lift yourself back up and get back on top of back to where you were?
Yeah, well, I'll keep it relevant to the trading, investing, and crypto space because it's something that needs to be addressed. It's important, I think, because like I said, and like we've been talking about, losses are a part of it, and not everyone talks about that. What you see on YouTube or Instagram or TikTok or Twitter or whatever is a lot of the time the Ferraris and the Lambos, but that's not a picture of reality. There's loss involved, and most people are taking losses. And losses hurt. It has to do with grief or letting go of something that you hoped for. And that's challenging. So I personally, it does kind of come back to the wellness side of things. I've taken plenty of losses, many. And it's important to be quick as you can with time. I think you get quicker to take the loss on. It's hard to cut off a finger. You don't want to cut off a finger, it hurts.
Rather not, yeah.
But it's better to cut your finger off than your whole arm.
Yeah.
And it's better to cut your finger off than two legs, And it's not a great analogy, but that's the idea.
I get the concept. Yeah. Like, don't let it.
So I've got
$1,000. Yeah.
I've got my $1,000. I put it into a trade. I'm thinking I'm going to double it, but instead it starts going against me. And so it hurts me to cut $20 out of that, but that's much better than it being $900 loss, for example.
Yeah. For sure.
So learning to be disciplined is number one in the risk management. But then as far as, the losses or things can go wrong pretty quick. Sometimes these markets rip. Sometimes they move fast, intentionally so. So I think being able to process that and move forward, like things like running really helps me, or exercise, moving my heart, getting my blood moving, processing emotion, processing circulation, getting out in the water for a swim. Even skip roping is kind of funny. It's kind of funny to say, but it really gets that like anaerobic kind of cardio going.
Love it.
And so whatever works for you personally is, everyone has their own kind of coping mechanisms, but you need to make sure that it's healthy and really helps you work it out. So you can move forward and be confident that you can exercise discipline. You can trust yourself and how you behave in these markets, because it's a sea of infinite choices. These markets are. You can make good choices, or you can make bad choices. And the human nature, like I'm saying, with the greed and fear, sometimes it leads you to make bad choices, but also because you're playing against LeBron James every time you play. So, I think it's being able to make good choices, to be able to use discipline, to be able to take small losses instead of big losses, and have a mechanism of moving it through you. You can see the surfboard in the background. I like to go surfing, I like to go running, a little bit of yoga, meditation, whatever it is. Some good sleep, that does wonders, and sometimes a little bit of time, and then you move forward.
Awesome. That's great advice. And look, thank you, Chris. I can't thank you enough for jumping on the Money Chasers podcast today. Really, really good to meet you. I'm looking forward to spending a bit more time with you and getting to know the ins and outs more about what you do. And no, this is awesome. I think a lot of our listeners will benefit from this. And once again, thank you to Think10 Capital for helping this podcast happen. So thank you, Chris. And until next time.
Until then, thanks so much, Michael. Appreciate it.
Awesome. Thank you.
Yeah.